The political unrest in Bangladesh has once again drawn global attention to Southeast Asia, a region already grappling with rising tensions following recent crises in Sri Lanka, Pakistan, and Myanmar. The upheaval in Dhaka not only casts a shadow over the region but also impacts India, which has a 4,096-kilometer border with Bangladesh, the longest with any of our neighbours. Amidst this turmoil, one industry stands to benefit: textiles. Bangladesh has boosted its market share in the apparel industry by leveraging the China Plus One strategy and is currently the world's second largest exporter, just behind China. However, with political unrest escalating, reports suggest that international buyers may now look for alternatives and India could fill that vacuum. As a result, the stocks of textile exporters surged as much as 15% on Tuesday. Now, Bengaluru-based Gokaldas Exports was the top gainer, reaching a record high of 1,095 rupees per share on the NSE and breaking a 5-day streak of declines. Other textile stocks like KPR Mill's Vardhman Textiles, Welspun Living, and Arvind Limited also experienced significant rallies ranging from 3 to 14%. In recent years, apparel buyers have increasingly diversified their procurement sources, favoring India. This trend is supported by Government of India's initiatives aimed at enhancing bilateral ties through agreements and treaties. Additionally, apparel buyers are consolidating their vendor list, which benefits large apparel manufacturers in India. Now, despite these favorable conditions, Bangladesh has been outperforming India in apparel exports. According to WTO data, 9% of the total global exports to the US were from Bangladesh, higher than India's 6%. Similarly, 21% of total exports to the European Union are also from Bangladesh. Until 2022, 11% of global apparel exports were from Bangladesh altogether. However, the current curfew and internet blackout in Bangladesh are severely affecting the manufacturing industry, especially the ready-made garment sector. Industry insiders project a 15 to 20% decline in RMG exports for the next summer season, which is January to March of 2025. Now, this is due to recent disruptions and factory shutdowns. So, is it the right time to buy textile stocks? Now, while India is well positioned to capitalize on these changes in global dynamics, analysts caution against chasing the rallies, as the crisis may provide only a temporary window of gains. They suggest investors wait for the rally to cool off before adding fundamentally sound companies with high return on equity in their portfolios for a long-term perspective. In conclusion, while the political unrest in Bangladesh has created short-term opportunities for India's textile industries, it's essential for investors to tread carefully. The current surge in textile stocks might be temporary, driven by immediate geopolitical shifts. As always, keeping an eye on the evolving situation and market dynamics will be crucial in making informed investment decisions.